Okay, Tesla said it delivered a little more than 310,000 vehicles in the first quarter, a modest increase from the previous quarter and a 68% increase from a year earlier. But the results fell a touch shy of some Wall Street estimates, as Tesla CEO Elon Musk said in a tweet this was a, quote, exceptionally difficult quarter due to supply chain interruptions and China's zero COVID policy. Let's dive into Tesla with Deutsche Bank auto analyst Emmanuel Rosner. Emmanuel, good to see you here this morning. Definitely want to touch on these delivery numbers, but first, this news that Musk is now a major stakeholder in Twitter, do you think this will cause him to take his eye off the ball on what he's trying to develop at Tesla?
Good morning. Thanks for having me. I don't think so. I think Tesla has had his hands into many different exciting projects for a fairly long time, has actually demonstrated the ability to both provide a vision for Tesla while doing it so for so many other companies. And I think at this point, he's also built a very strong team at Tesla. It's no longer just a one-man show. He provides a vision, but it's executed quite well. So I don't believe that this is something Tesla investors should have to worry about.
I mean, as we talked about earlier, it seems like, there's this sort of Tesla, Elon Musk Twitter persona, and then there's him actually running the company. And it seems like that those are two different things. Emmanuel, what do you make of what we've been seeing in Shanghai with some of the lockdowns and the fact that Twitter was still able to come out with these delivery numbers? How did they navigate that?
Yeah, no, this is extremely impressive. As you mentioned, the 310,000 units was essentially in line with street expectation. We were slightly higher than that, but they achieved that despite being shut for the last week, which is not just a full week, it's also the last week of the quarter where they usually cram all these local deliveries, to try to make numbers. And so this has been a critical week. They were, shut down. It really shows that they were tracking ahead of this, before that, which had been essentially our expectation. More broadly, we've seen Tesla execute incredibly well in a challenging supply chain environment as well. If you sort of think about this year-over-year growth that you mentioned, 68 or 70%, when global auto industry is down so much on a year-over-year basis, it's truly a testament to Tesla's ability to secure the supply, to integrate vertically when needed, to essentially make sure that it has all the pieces needed to continue to operate, which is it's been doing quite well for the last 18 months or so. So it's a continuation of this and makes us very optimistic, for the rest of the year.
The costs, Emmanuel, to produce the batteries that go in Tesla's cars, those components that go in those batteries have really inflated here of late. How big a risk is that to Tesla's bottom line?
So we've had this exact conversation with Tesla not that long ago, and we sent some pretty strong conviction from the company that it will not only be able to offset these raw materials pressure to pricing, but potentially more than offset it. And in fact, if you watch what has been happening, just last year, Tesla raised prices in the US on its vehicle 10 times, and then a few more times again this year in a fairly meaningful way. Tesla has been extremely proactive in essentially anticipating this pressure and pricing the vehicles accordingly. A lot of these price increases that were announced even late last year haven't made their way into benefiting the income statement yet. So overall, we actually feel that they will be able to maintain or potentially even improve gross margin despite this, the pressure in the near term. Longer term, Tesla is also one of the best positioned to benefit from very long-term sourcing contract that they've put in place. So they really have strategic partnership with some of these suppliers, and also with the ability to control the chemistry of their own batteries and essentially move it away from some of these expensive components as needed. So we feel both short-term and long-term, they're probably one of the best positioned automaker to deal with this input cost pressure.
Emmanuel, on a related note, is there a ceiling for what Tesla can charge for the Model 3?
I assume there is. There's always a ceiling for the price of things. But what's interesting is if you watch the wait time to get a vehicle, if you place an order today or if you wanted to place an order last week, these wait times have essentially been getting longer, not shorter. And that's globally and that's across models. So Tesla is monitoring these very, very closely as well. It essentially has a real-time feedback loop into can it keep increasing pricing or not. The day this kind of wait times will start getting shorter, they will get a pretty strong signal that they've probably pushed it as far as they can. This is absolutely not the case right now. As I said, it keeps getting longer. Almost any model you'd want to order right now, you would have to wait at least 6 to 9 months. In some cases, even much more than that. And that's despite all these announced price increases. So I assume, drivers go to the pump, see what the shock is, sticker shock in terms of gas prices, and EV still makes sense even at a higher price point. But, it will eventually come to an end. So far, there's no indication of this.
I think it was your note, Emmanuel, that pointed out Tesla's raised prices, 10 times of late? How many more times do you think Tesla will increase prices this year?
It's tough to say, honestly, because they're not doing it just in a reactive way. Like we've seen input prices go up and they just increase price reactively. They're truly doing this proactively. And I think it's back to my last answer here, which is they're doing it in a very proactive, opportunistic way. They're monitoring the market response to these price increases, and will probably keep doing it as long as they're not seeing any demand deterioration. And so it will partly depend on what the consumer response is to it. As long as it's not hurting, the wait times, I think that Tesla could keep passing on some. It's also a broader question around the strengths of the consumer. Obviously, if we start seeing some consumer confidence deterioration in the US, but also in Europe or any of the other large markets for Tesla, I think that this is something that would potentially hurt their ability to do so. But as I said, as of today, the wait time for vehicles keep getting longer. And so that's a signal to Tesla that they can pass additional ones as needed.
Really appreciate the insights. Deutsche Bank auto analyst Emmanuel Rosner, good to see you.